Hello, this is MiTam Television exploring United States stocks. This video is being broadcast simultaneously on our channel through a partnership with Maikeuron Television. In the United States stock blue chip analysis segment, which stock are we going to learn about and study together today? It's a company called Maikeuron Technology. Its ticker symbol is MU. It's the only large-scale memory semiconductor manufacturer in the United States. Let's take a look at it together, step by step. Maikeuron Technology has been a very famous company in the semiconductor industry. Then for a while, it became a forgotten company in the market, but recently there have been some signs of a turnaround. I think it's one of the companies in the United States that is benefiting from the country's efforts to strengthen its domestic semiconductor industry and make these companies more competitive. So let's review the current status of this company and see if there's a possibility for it to recover, and also look at how far it's come so far by examining the data together. If we look at the stock price trend over the past year, it has dropped a lot from its peak, but it has also risen significantly from its lowest point. Compared to the 52-week high, it has dropped by about 60%. But since it hit the bottom on April 7th recently, it has risen by about 95%. So the stock price has roughly doubled. It only dropped by 60%, but it went up by 95%. Nevertheless, the stock price is still much lower compared to the past. So, if you misinterpret these rates of increase or decrease, it can be a big problem. Even if something drops by 60% to recover the entire stock, even if it falls by 50%, it needs to go up by 100% to recover. Since it's 60%, the stock price needs to rise much more than that to recover. If you invest in a stock and it drops by 30 to 50%, it can take a considerable amount of time for the price to recover. That's how you should view it. On the other hand, if you buy well at the bottom, there can be situations where you can make a significant profit even if the price doesn't recover to its previous high. We can interpret these ups and downs in this way as well. First, let me explain an overview of Maikeuron Technology, and then we'll take a look at the data. As I mentioned earlier, it's the only large-scale memory semiconductor company in the United States. Many memory semiconductor companies once existed, including several in Japan. In fact, as Samsung Electronics and SK Hynix have virtually taken over the memory semiconductor market in an oligopoly, many competitors have either closed down or merged, and even after that the results haven't been very good. So in this situation where the market is essentially an oligopoly, recently with the development of things like GPUs and artificial intelligence, the memory called high bandwidth memory, which is used in GPUs, has grown significantly. As a result, the landscape of memory companies is completely changing and undergoing a major upheaval. Even in Korea, SK Hynix is known to have supplied high bandwidth memory to NVIDIA first, while Samsung Electronics has not yet received final approval and is still undergoing testing. These developments have created a situation where the rankings of memory semiconductor companies could change significantly in the future. So in general memory semiconductors, Micron technology was known to be around 3rd or 4th place after Samsung Electronics and SK Hynix. But now, in the artificial intelligence related sector, it seems to be a company that is responding with something new and at a very fast pace. The company's website and news outlets are highlighting a significant message about the situation. What that means is that Micron Technology is making large-scale investments and taking actions for significant new changes. That's how you can see it. So, to summarize, Micron Technology has announced that it will invest about $200 billion in R&D within the United States. So the main point is that this is where the company's headquarters originally started. They plan to build and expand 2 new semiconductor plants in Idaho and then establish up to 4 new plants in New York. Also, they aim to lead the industry by investing this money in advanced packaging technology processes related to high bandwidth memory. This is one of the areas that Micron Technology is really pushing hard. The strengths and advantages are that they are already mass producing and supplying high bandwidth memory 3 related products for NVIDIA starting from the first half of 2025. Recently, on June 12th, there was news that they announced a supply contract for high bandwidth memory, 3 with the Advanced Micro Devices MI. 350 GPU and Advanced Micro Devices also released a related article. Since this has also come up with Micron technology, there is a high possibility that related sales will come out in the second half of the year. And the news is that not only Micron technology but also Samsung Electronics will be included in the Advanced Micro Devices MI 350 GPU. Both companies are being discussed together currently. However, there is still no news of a supply contract between Samsung Electronics and NVIDIA, so the parts that SK Hynix had been exclusively supplying to NVIDIA are now being produced and supplied by Micron technology starting from the first half of 2025. And then, there are also some positive developments like signing a supply contract with Advanced Micro Devices. The memory currently used in GPUs is high bandwidth memory, 3. Now, developing high bandwidth memory, 4, is something that companies like SK Hynix and Micron technology are considering very important. Samsung Electronics is the same as well. In the case of Micron, they are aiming for mass production in 2026, so they've already shipped a 36 GB high bandwidth memory, 4 sample. So the main artificial intelligence clients, which would mainly be companies like NVIDIA and Advanced Micro Devices, so they've sent samples to those companies and are currently waiting for actual approval. So when you look at the market purely in terms of technology, especially limited to high bandwidth memory, related technology, SK Hynix is the most advanced and others are following behind. And since they're a bit ahead of Samsung Electronics, personally I hope Samsung Electronics will work harder. I think that, contrary to what I expected, Micron technology was almost on the verge of collapse, but now they're catching up at a pretty fast pace. I think that, in addition to receiving various subsidies with the support of the Trump administration in the United States, they're probably also getting a tailwind in supplying these kinds of products. However, in terms of market share, SK Hynix still overwhelmingly leads the high bandwidth memory sector with 70%. Micron's goal will be to catch up in this area and expand its market share. The risks we can see for this company are, while the previous points are very positive factors, the part we need to consider as a risk is the massive investment. It's a massive $200 billion investment. Due to this massive investment, the increase in short-term financial burden appears to be a risk factor. So, it's essential to financially monitor how much debt or stock issuance will increase in the future. Next, it's very important to see whether the products produced in this way actually lead to sales. So investments in tangible assets are expected to increase significantly in the future, and this will probably go up by about $200 billion, right? The most important point is whether this increase leads to higher sales, and ultimately the key to this sales growth is not just high bandwidth memory 3, but also whether high bandwidth memory 4 gets approved and adopted by NVIDIA or Advanced Micro Devices. If news about these things comes out, we can actually anticipate the sales figures in advance as a leading indicator. So, closely monitoring how cash flows related to financial activities are managed and whether the company can withstand these factors will be a very important point when analyzing Maikeuron technology. Now, based on the data, I'll review things through 4 questions. Is it a solid company? So the score is higher than expected, and since it has reached the top 5% in the United States, that's quite high. So we can see that Maikeuron technology has improved a lot, but if we look at last year, the data showed scores like this a year ago. So compared to that, it seems like this is a case where overall growth, stability and profitability have all improved significantly. Even if we look at the overall score, we can see that the score has been steadily increasing quite a lot compared to a year ago. So we were able to confirm through the Smart Score's overall score trend over the past year that the company is moving in a better direction. I took a look at the financial chart. Earlier, I mentioned that it was heading toward collapse, but then made a turnaround. If you look here, up until 2024, it was running at a loss. This line here marks the break-even point, so the periods below this line were times when the company endured significant difficulties. Then, starting from February 2024, sales began to turn around first, and after that, profits and other figures also started to improve. As of February 2025, when we look at the recent performance, the operating profit has turned around to about $6 billion, and the net profit has also turned around to about $4.6 billion. So through these large-scale investments, Micron Technology is currently shaping its future plans. If you look at the profit margin as well, since this line here is zero, you can see that they were in the red for quite a long time. The reason why these companies have such large deficits is because the semiconductor industry is very sensitive to economic fluctuations, and due to the nature of semiconductor manufacturers, they invest heavily in fixed assets like equipment and factories. However, when the semiconductor market slows down, these facilities still incur depreciation and other costs, so if sales decrease, there's a high chance that profits will quickly turn negative. On the other hand, if sales recover to a certain level, profits and profit margins can improve rapidly. This is a characteristic of semiconductor and equipment companies, so I think it would be good to keep this in mind when analyzing these types of companies. Currently, the operating profit margin has risen to 19.7%, so we can interpret this as showing a very rapid recovery. Next, when it comes to manufacturing companies, I mentioned that you should pay close attention to the inventory turnover days. When sales speed recovers for these manufacturers, the inventory turnover days tend to decrease. So, if the inventory turnover days increase, it means sales are becoming sluggish. If you look at the recent data from 2022 to 2025, which is about 2.5 to 3 years, you can see that the inventory turnover days have been gradually decreasing step by step. This means that products are selling well. That's how you can interpret it. In the case of accounts receivable turnover days, it refers to the number of days it takes to collect money after selling goods. If this number increases, it means that the period for collecting payments is gradually getting longer. What that means is that the competitiveness of the products isn't very high, or it's a bit unstable. On the other hand, if both accounts receivable turnover days and inventory turnover days decrease, it means that as goods are taken, cash is also being paid quickly. For high bandwidth memory, 3 all 2025 supplies are already sold out, and contracts for 2026 supplies are currently being pursued. So, what happens if everything's sold out and you can't supply any more products? Companies will need to pay promptly and secure supply, leading to more favorable contract terms. Those aspects will show up as a decrease in the accounts receivable turnover days. In manufacturing, if both accounts receivable turnover days and inventory days decrease, it indicates the product is competitive and the market response is favorable. Next, if you look at the cash flow statement, you'll see that 0 is the baseline, with positive values above and negative values below. Since operating activities are positive and financing and investing activities are negative, the company currently shows a strong cash flow. The part I marked as a crisis for the company is when operating activities have almost turned negative, and since the company still needs money for ongoing investments or operations, you can see that the green area labeled as financing activities has remained positive. There has been an ongoing cash flow deficit, which has been addressed through financing activities such as loans or capital increases. The company has managed to stay afloat through those means. So the company was in crisis, but fortunately, as we moved into 2023 and 2024, cash from operating activities increased significantly, and now we've entered a phase where we no longer need to borrow as much cash through financing activities. Investment activities are still ongoing, but if we invest the $2 billion I mentioned earlier, the gray graph representing investment activities here will continue to grow even larger. If you look here, you see $10 billion, $100 billion. This is about the $20 billion level, right? Of course, we won't invest $200 billion all at once in a single year, but investment activities will drop significantly like this. As I mentioned, when cash goes out in investment activities, it shows as a negative on the cash flow statement, so this will be a huge negative. Next, since operating activities go up into the positive, it means we'll definitely use the money earned here to invest in this area. However, since the cash flow from operating activities isn't enough to cover the entire $200 billion investment, there's a possibility that some of the financing activities will turn positive again. So there's a possibility that it will change from positive to positive like this. That's usually the kind of cash flow you see in growth companies. It's not that this in itself is a problem, but what's much more important is whether those investments later lead to sales and profits. There are indicators to check that, like fixed asset turnover and so on, but for now I think the quickest way is to check the news. So if you see news about supply contracts being signed, that means the operating cash flow is positive, and then the financial activities might increase and get pushed up. So even if financial activities turn positive and investment activities show a huge negative, it might not be a big problem. So I mentioned earlier that changes in that area are one of the risk factors, and I think it's important to keep checking on those consistently. Expectation. If we take a look at the performance, right now in 2024 there's significant growth, and then it's looking good through 2025 and 2026 as well. After that, there are some points where things seem to stall. This isn't data for 2 years, it's for 1 year, but if you look on the right, the dotted line is almost at a standstill. What that means is, in 2 years it enters a stage where there's almost no growth. This is the current forecast, so I think tracking how this forecast changes is a very important point when analyzing microtechnology. The turnaround for growth has started now, and since things like high bandwidth memory have begun to be supplied, there's a strong possibility of significant growth over the next 1 or 2 years. But what the market is seeing right now is that in 2 years, things will slow down a bit. I think things like the mass production of high bandwidth memory or high bandwidth memory 4 haven't been reflected yet. So when those factors are reflected and articles come out, we need to see whether the revenue and earnings per share consensus for 2 years later goes up or stays the same. This will be a very important point in determining whether Micron technology is a good long-term investment target or not. Since consensus data is updated weekly, you can check it on other sites or come to our site, Choice Stock, where you can see everything for free. It would be good to make your judgment while checking the changes in the data. If you look at the current detailed numbers, for example, sales are calculated in August, and for August 2025 it's $35.5 billion, which is a 41% increase. So if you look at the sales growth rate, it's extremely high. The earnings per share is $6.34, an 805% increase. So until August 2025 it looks like there will be tremendous growth, and right now we're already past June. Then, in fact, the market has already seen the stock price nearly double. Compared to the lowest point, the next focus will be on the 2026 earnings projections, and soon the stock price will mainly react to that period. Actually, from now on, it's much more important to see how things go in 2026 and 2027, rather than focusing on the high growth rate of 2025. For 2026, the sales growth rate is 26%, and the earnings per share is 52%, which is quite high. So I don't think there will be any major problems, but whether these parts get upgraded in relation to high bandwidth memory supply will be a more important point. So if you're looking at Micron for about 6 months to a year, the upward revision point for 2026 will be the most important indicator for the time being. Second, if you look at 2027, the market consensus is that sales will grow by 3% and earnings per share by 1%, which basically means growth is expected to stop. Depending on whether sales can rise back into double digits, the stock price could keep rising for quite a while, or it might just react for about a year and then stop and fall again. Since this will be the deciding factor, it's important to consistently check the data related to this point. Our Choice Stock app has now been released. Since it's available on both Android and iPhone, you can search for it and download it to access this data for free and also receive notifications. Setting up notifications and installing the app should be helpful for you. If you look at the valuation, we developed this ourselves and calculated it with our own data to show you. In the past, you can see that Micron technology was considered expensive, as shown here. If you look on the left, there were periods when the stock price was in a highly overvalued range like this. And if you look at these yellow marked areas that I checked here, around April 8th, this is the undervalued area, this is the undervalued line, and this is the fair value line. There was a period when it broke below that line, so it dropped all the way to a very undervalued range. And then as the stock price almost doubled, it's now entering a phase where it's about to reach the overvalued range. So in terms of valuation, it's now entered a somewhat expensive price range. But if you look at this range, since it's already about 96%, the stock price has almost doubled in this section. Instead of focusing on whether to buy now, examine past changes in supply, demand, and performance growth to make your decision. Since stock prices don't always just go up, they also go through corrections and sometimes rise further. If you judge those movements and decide when to buy, using charts and valuations like these can be very helpful. Let's look at the momentum, move over to our service, check a few of the current data points, and then wrap things up. If you look here, we use the exponential moving average line on the exponential moving average chart. In the short term, when the 5-day line crosses above the 21-day line, it's considered a good signal, a positive bullish signal. Looking at when the buy signal appeared, it seems to be around early May. Initially, the change moved in this direction, but in reality, there were ongoing buy and sell actions throughout the process. From around 2024 for almost a year, the chart based on technical analysis showed repeated buy and sell signals. But if you kept following these technical analysis signals and kept buying and selling, it's highly likely that you would have accumulated continuous losses. The reason is when there are frequent signals like this, it usually means you probably bought at slightly higher prices and then had to cut your losses repeating this pattern. And if you look at it in the long term, this was a definite sell signal, and at that time there were constant changes where it was uncertain whether the trend would turn or not. But honestly, you can't really know if it will turn here or there, so it's impossible to be sure. But if you look at the valuation I mentioned earlier, the point when the valuation dropped enough to be considered cheap was in April 2025. At that time, the valuation showed it had dropped sufficiently, but it wasn't at its absolute lowest. And if you look at the way the trend forms here, that's why you shouldn't just rely on technical analysis, so don't just look at technical analysis. It would be good to look at fundamentals, valuation, and supply and demand in a balanced and comprehensive way. Using all these together gives you another tool for investing, so I recommend considering them all together. Now I'll move to the website and explain further. Here, I'll search for Maikeuron technology now, and you can just take a look at the other things. Maikeuron technology currently has a buy signal from us at $85, and the current increase rate is about 41%, but overall it's still in the negative. Because just like before, there have been stop losses in the buy and sell zones, and if you look here, there were similar stop losses as well. We entered the zone where we thought it was cheap, but although it came out much later than the technical analysis earlier, there was no other way. We couldn't avoid it, but then a buy signal appeared here, and fortunately, as the price quickly went up, it's now recovering the loss zones from before. So I wanted to show you this score, and when you look at it, you can see the past data like this. So a year ago it was 49 points, but now it's 75 points. It went up quite a lot, right? If you want to see what caused it to go up, just scroll down a bit and it'll show you like this. So if you look at growth, it's about the same, from 85 points to 80 points, and it's maintaining a pretty high level of growth right now. The monopoly score went up from 30 points to 50 points, and the financial stability score was 60 points but increased to 100 points. The company has seen significant improvements, particularly in profitability. A year ago, profitability was at zero, meaning the company was operating at a loss. After turning a profit, key metrics like profit margin have improved greatly, as shown in the provided data below. The operating profit margin is 19.7%, matching the chart data. The net profit margin is 14.9% return on equity, 10% return on assets, 6.7% and return on invested capital, 9.9%. These metrics are used for score assignment. Profitability increased from 60 to 65 points, and cash generation rose from 70 to 80 points, bringing the overall score to 75 points. So we can see significant points of change through this as well. Of course, now you can check through the financial statements or financial charts, but if you're not used to looking at those, you can just use this since all the data is checked and the scores are shown here. I want to say that there shouldn't be any difficulty for you in making your judgment. Next, earlier in the financial section, I mentioned some of this company's risks, and regarding the risks in this company, if you look here, one important thing is how much this company is increasing its borrowings in similar aspects, and another is how much stock they're issuing and whether the capital is increasing. I think these parts are very important. So far they haven't raised capital or anything like that yet and have been using borrowings. So if you look here, you'll see that it's much clearer to look at the borrowings on an annual basis. If you look at it annually, you'll see that the borrowings have increased from $5.8 billion and have steadily risen to $14 billion recently. So they've increased their borrowings by nearly $10 billion. Right now, They're investing this money very quickly into tangible assets. If you look at the tangible assets, you can see that they've been making capital investments at a pretty fast pace over the past few years. As mentioned earlier, the company plans to invest $200 billion. Then they need to have cash flow, and if you look at their current cash flow, it's made up of cash, short-term investments, and long-term investments. So even if you estimate generously, they have about $7 billion, $8 billion, $9 billion, at most around $10 billion in cash. So in their current situation, how on earth are they going to raise $200 billion to invest? Of course, it's not something they'll do in just 1 year, but one way is for the company to generate profits and bring in cash flow. If you look further down, there's something called cash flow from operating activities. That would apply here, operating activities. They mention cash flow terms, but the current cash flow from operating activities is around $8.510 billion, which is expected to continue recovering. But in the end, the shortfall will likely be covered through borrowings or capital increases, and there's a high possibility that they'll invest in tangible assets. If you look at tangible assets, they currently have about $40 billion in tangible assets, and they're planning to invest an additional $200 billion into this. Of course, not all of the $200 billion will go into tangible assets. Some will go into other assets as well, but a significant portion will be invested here. By massively expanding these facilities, Micron Technology is basically transforming into a completely new company. In simple terms, they're making a huge investment that could send them skyrocketing. But if this fails, it could reach a point where we might never see Micron Technology again. They're at a crossroads and have made a decisive move. That's the right way to see it. Micron has made its big bet, and as investors, we're now at the point where we have to decide whether to join in on that bet or not. As I mentioned earlier, I've shared a lot of news, but I think there will be even more news coming from Micron Technology in the future. There will be news related to facility investments, and then news about how the company will raise funds for those investments. Then there will be news about how we will supply, make contracts with, and start mass production for companies like Nvidia, advanced micro devices, and other artificial intelligence companies. Every time such news comes out, there's a high possibility that the stock price will fluctuate significantly. By looking at those directions, if you make your investment decisions, it will help you get a sense of the overall direction for Micron Technology. If this stock analysis video was helpful, please subscribe, like, set notifications, and comment. Thanks. Thank you.